Welcome to Allenberry Reports TV. I'm your host, Allenberry Labucan from allenberryreports.com. So today we wanted to talk a little bit about trends that we're seeing that are very favorable to people that are what you call contrary investors. And lately we've been talking a lot about in our past shows. If you're watching the show on our website, just look above me. We have a section called the ABR TV Guide, and in that TV guide we have a listing of all of our past shows, the titles of the shows, what we talked about, an overview of what we talked about in the shows. And in those past several shows we've talked a lot about, in fact we even called one of those past shows Fear and Loathing in the Stock Market. And what that high level of fear and loathing is caused is for some stocks to be trading at significant bargains. And we're not just talking about the big industrial stocks on the S&P 500. It also falls into the commodities, the resource stocks, and that's really what we follow, from the small resource commodity kind of plays all the way to the big industrial plays. And this high level of fear has created a market that, we've talked about a lot, that one of the best strategies that we see going forward is a buy the dips and sell into the rallies. And what we're saying there is that when fear takes over the market, you're going to see these dips. And when and then that usually dissipates after a period of time, usually within days or so, and then we see the next rally. And if you're selling into the rallies, you're taking profits into the rallies, it gives you a chance to build up cash for the next dip, and then be able to buy at bargains again and try to play that kind of a trend going forward. And so when you're in that kind of a situation, I was talking to one of our readers and viewers earlier today, and he said, well, yeah, but the hard part is to be a contrarian. It takes some courage. And I corrected him by saying, actually, it doesn't take courage when you look at things and try to separate the emotions of the market fluctuations and the how the crowd is reacting to news, and focus on the fundamentals. Because if you're able to focus on the fundamentals of what, for example, the valuations of the companies are relative to what they have going on, it makes it much easier to see the forest through the trees, or the value through the trees, if you will. And so that's why these emotions that are very big in the market right now are creating what we call a contrarians market, or a stock pickers market. We talked about stock picking in our last show, and an example of how I go about doing things is, I've been spending more time in a website. I mentioned this recently, a website called StockTwits. If you're not already on there and you want to connect with us, just look to the bottom left of the website, and you'll see the StockTwits thing. Or we also, to the bottom, just below this video player, we have my actual a feed to StockTwits, my profile feed, which keeps track of all of my past calls. And if you were watching yesterday, watching the StockTwits yesterday, we put out we made a comment. I'm just going to pull it up here. I've got it somewhere. Just bear with me a second. And the headline of the comment from that was, stocks, gold, silver, oil looking oversold. Folks are hanging sentiment on the not so super committee, and then I mentioned that we're doing a show tomorrow, which is today, to discuss that. And so, getting on that super committee, I think a lot of people were sort of putting some hope in the idea that these politicians were going to be able to do something worthwhile in this committee. and I didn't have much faith in it. I've been calling it a not-so-super committee for a long time. I find it very difficult to be able to figure out how you call a committee full of politicians super, and that's why I've been calling it the not-so-super committee. And so when the super committee or not-so-super committee came out and made their statement that they really are at an impasse, stocks sold off yesterday, and the markets were there was a lot of bleeding on the streets yesterday, and I made those comments after the market had closed. And so today we're off to a much better performance for gold, silver, oil, and the stocks had rallied for part of the day, and then they kind of ended up sort of with no flat for the day. So why I do those kind of things, I'm finding that these kind of short-term calls also are effective in giving me topics to talk about. In fact, yesterday after I made that stock twits, I also made a posting in our report section of the website. If you look above me at the report section, in there what we have is a sort of, for yesterday, for example, after I had made a comment in the stock twits, I then made some additional, because with the stock twits you can only make about 140 character comment. And so oftentimes you got to cram everything in. What I did with the report yesterday is I made a more extensive comments about that posting. And so if you check out the report section above there, and you'll find that. And so basically that's the way we're going to be doing. It looks like we'll be doing that kind of thing a lot in the future, you know, making these short-term calls and stock twits, expanding on them in our report section, and then talking about them. For example, today we got to put out a new show because we wanted to talk about these things. So getting back to that, you know, I'm seeing this a lot, and it doesn't really this trend of the importance of being a contrary investor, and why it's so important. It's always important, I think. The best investors over time have always been the contrarians out there. So it's always a good time to be a contrarian investor. But when things get the way they are, where there's a lot of emotion in the market, it doesn't take courage to buy things when they're on the cheap. It takes the ability to look at things through a realistic glasses instead of emotional ones and find value. And right across the spectrum, whether it comes from the biggest industrial companies on the in the markets, in the S&P 500 kind of companies, all the way down to the major gold company or major mining and oil producing companies, the smaller ones, the ones that we follow a lot, the smaller technology companies. We're seeing a lot of value out there right now. And when the market is highly fearful, it is without a doubt a great time to be looking at getting very bullish. I'm getting to the stage now where I call it what I call bang on the desk bullishness, especially for commodity related companies. I'm really seeing that there's a lot of bargains out there, and when the crowd is fearful, it's always a good time to get more bullish. And again, that takes a contrarian kind of a mentality of an investor, and I really think that kind of a mentality is what's going to pay off in the future. And you know, when you can find the kind of bargains from the biggest companies all the way down to small companies, it's quite I don't want to say impressive right now, but it is very apparent the bargains that are out there, and especially with the, you know, I follow a lot of resource companies, and looking at the resource companies, I'm just quite surprised at. There's a couple things that I'm seeing is that my whole argument behind being a bull on commodities for the past 10 years, when that bandwagon was empty, 10 years ago, the reason that I was so bang on the desk bullish about it was the fundamentals of supply and demand. For a long time, there hadn't been enough new discoveries to feed the future demand. And since 2008, we kind of had a few good years of better exploration. And I was seeing a lot of news, a lot of stuff to talk about in the shows. I've talked about, in fact, if you want to know the companies that we follow closely, go to the TV guide on the website, and in there you can find, we've been doing these shows now for close to 2 years, and you can find all the companies that we've been talking about over the last couple of years, and there's a really good radar screen there for you to find some outstanding companies that are trading at significant bargains. We're a big believer, this is a bit of a contrarian play in a general sense as well, is that most investing professionals, if you talk to them, they don't really follow the commodity space that much. If you you watch on CNBC or other shows, 10 of those guys, maybe 2 of them are actually, all 10 of them will comment on it, but only a couple of them really, you can tell that they really follow it closely and are involved with it. And so that's in a sense, is also a contrarian play. Just because something moves upwards, say a year from now, the stock market is considerably higher, people are gaining more confidence. We got bullish. We've been bullish in the last few years. We've been really bang on the desk bullish a couple times in late 2008 and this summer of 2011, and we felt bang on the desk bullish that the market was just out of whack with reality, and we continue to be out of bullish. So let's say, for example, that the stocks and commodities move up the way we think that they're going to over the next year. Just because the crowd is getting bigger doesn't necessarily mean that you're not a contrarian. It might mean that at that point in time, you want to be a raging bull. And or say you have a sector like commodities, for example, where gold and copper and oil and uranium have moved up a lot. Yet, the stocks have not moved up as equally as they should. So there's a contrarian play inside of a bull market. So what I'm getting at is, and what I started the show with, was wanting to talk about being a contrarian. Also want to emphasize that strategy that we've been talking a lot about lately with the buy the dips and sell into the rally mentality, and looking for bargains, because there's a lot of them out there. So it's a great time to be a contrarian investor, and we encourage all investors all the time to be contrarian investors, but now it's really important to sort of ignore the crowd and try to find the value and buy bargains, and when things are when the market dips, and take some profits along the way so you can buy the next dip. So on that note, we'll wrap up today's commentary. Before closing the show, we always like to stress that this show and our reports are for information purposes only. We aren't making buying or selling recommendations. It's important for you to do your own research and speak with your financial advisors before making any investment decisions. We're always trying to grow our audience, and we get a lot of referrals from you, the viewers and readers of our website and our reports, and we really appreciate that. Also wanted to send some thank you notes out to, we use youtube.com as our primary website to produce and broadcast the shows. They have a great website for anybody that's interested in doing online shows, and we highly recommend them. Also, if you look to my left on the website, you'll notice that we have some banner sponsors. Those banner sponsors are really important in us being able to do the work that we do. And if you want to learn more about them, just click on their banners, and it's directly linked to their websites where you can go and find more information out about those companies. So we'd like to thank those banner sponsors. And of course to you, the viewers. Without you, we wouldn't have any reason to do the show. So thank you very much for tuning in. You can find all of our work on our website at allenberryreports.com. We hope to see you soon, and have a great day.